As global awareness around climate change, fossil fuel depletion, and sustainable development grows, renewable energy is transitioning from a niche interest to a cornerstone of the global economy. Governments, corporations, and individuals alike are seeking cleaner, more resilient energy systems. This shift has opened up a range of new and exciting investment opportunities across various sectors, from solar and wind to battery storage, green hydrogen, and beyond. This video explores the top 10 new investment avenues in renewable energy, providing insights into where innovation, demand, and profitability intersect in today's green economy. 1. Offshore wind energy projects. Offshore wind energy has seen rapid technological advances and massive government support in recent years, especially in Europe, Asia, and North America. Unlike onshore wind, offshore projects benefit from higher and more consistent wind speeds, making them more efficient. With floating wind turbines now capable of being installed in deeper waters, new geographical markets are opening up. Major players like Ørsted, Equinor, and Vestas are expanding globally, offering substantial growth opportunities for early investors. Additionally, government tenders, tax incentives, and green bonds make this sector increasingly attractive to both institutional and retail investors. 2. Solar panel manufacturing and deployment. Solar energy remains a top investment choice, but newer opportunities lie specifically within manufacturing and deployment infrastructure. Innovations in thin-film solar panels, perovskite technology, and bifacial solar cells are making solar power more efficient and affordable. Countries like India and the US are heavily subsidizing local production to reduce reliance on Chinese imports, creating investment openings in localized supply chains. Moreover, community solar projects and solar leasing models offer scalable investment paths with lower capital requirements for individual investors or small firms. 3. Energy storage solutions and battery technology. Energy storage is key to the scalability of renewables, and battery innovation is at the center of this transformation. Lithium-ion batteries still dominate, but emerging technologies like solid-state batteries, flow batteries, and sodium-ion alternatives promise longer life cycles, greater safety, and lower costs. Companies like Tesla, CATL, QuantumScape, and startups such as S Inc. are leading this charge. Investment in battery manufacturing plants, raw material supply chains, e.g., lithium, cobalt, and nickel, and grid-level storage infrastructure is surging, offering strong medium and long-term returns. 4. Green hydrogen production. Green hydrogen, produced using renewable electricity to electrolyze water, has become a buzzword in decarbonization, particularly for sectors hard to electrify like steel, cement, and aviation. Countries like Germany, Japan, and Australia have set ambitious hydrogen roadmaps, attracting billions in public and private capital. Investing in electrolyzer technology, hydrogen transport infrastructure, and utility-scale hydrogen plants presents massive upside potential. Companies such as Plug Power, ITM Power, and Nel ASA are already gaining attention in this high-growth sector, which some experts estimate could be worth over $2.5 trillion by 2050. 5. Renewable energy ETFs and green mutual funds. For retail investors seeking diversification, renewable energy-focused ETFs and mutual funds present a lower risk route. These funds typically invest in a basket of companies involved in solar, wind, hydroelectric, and other sustainable energy solutions. Notable ETFs like iShares Global Clean Energy ETF, ICLN, and Invesco Solar ETF, TAN, have shown resilience and consistent growth, especially during market shifts toward ESG investing. As climate risk becomes a key component of financial analysis, these green funds are gaining traction, bolstered by increasing inflows from sustainability-focused investors. 6. Electric vehicle, EV, infrastructure and charging networks. The global transition to electric vehicles is driving demand for renewable-powered charging infrastructure. Investing in EV charging networks, especially those powered by solar or wind, offers a lucrative intersection of clean energy and mobility. Companies such as ChargePoint, EVgo, and Blink Charging are scaling operations across urban and rural areas. Moreover, partnerships between automakers and clean energy providers, e.g., Tesla superchargers powered by solar farms, provide synergistic growth opportunities. Municipal and commercial fleet electrification further expands the market for renewables integrated EV charging stations. 7. Smart grid and grid modernization technologies. Smart grids are crucial for managing the variable output from renewable sources and ensuring reliable electricity delivery. Investment in digital infrastructure, such as AI-powered grid analytics, smart meters, demand response systems, and blockchain for energy trading, is booming. Companies that provide software platforms and grid hardware solutions, including Siemens, Schneider Electric, and newer startups like AutoGrid, are leading innovation in this area. As power grids become decentralized and bidirectional, investing in grid tech that enables efficient integration of renewables is increasingly essential and profitable. 8. Agrivoltaics and dual-use solar farms. Agrivoltaics refers to the simultaneous use of land for both solar power generation and agriculture. This dual-use model addresses land use concerns while boosting farmer incomes and increasing land efficiency. Investment opportunities range from developing agrivoltaic farms to funding research in crop optimization under solar arrays. The practice is gaining traction in countries with land scarcity, such as Japan, India, and parts of Europe. Innovative agrivoltaic companies are securing early-stage funding and government grants, offering ground-floor investment potential with strong environmental and social impact. 9. Renewable-powered data centers and green cloud computing. Data centers are notorious for their high energy consumption, but an emerging trend is the shift toward 100% renewable-powered facilities. Tech giants like Google, Amazon, and Microsoft are investing billions in clean energy to power their cloud infrastructure. Meanwhile, startups are creating decentralized, blockchain-based green computing networks powered by solar or hydro. Investing in companies enabling this transformation, whether through green power purchasing, cooling technologies, or renewable microgrids, offers significant upside as global data consumption grows exponentially alongside environmental concerns. 10. Carbon capture linked to renewable projects. While carbon capture is often associated with fossil fuel plants, there's growing interest in combining renewable energy projects with carbon sequestration solutions. This includes using excess wind or solar energy to power direct air capture (DAC) facilities or integrating bioenergy with carbon capture and storage (BECCS). Companies like Climeworks and Carbon Engineering are pioneering the sector, and some governments are offering carbon credits or subsidies for renewable carbon hybrids. These projects appeal to ESG-minded investors aiming to support not just clean energy but active climate repair. The renewable energy sector is no longer a speculative field. It's a fundamental part of the future global economy. From established options like solar and wind to emerging sectors like green hydrogen, battery storage, and agrivoltaics, investment opportunities are expanding rapidly in scale, variety, and accessibility. Governments are offering unprecedented support through policies and incentives, while public sentiment increasingly favors clean energy. For investors, this confluence of technological advancement, political backing, and market demand creates a fertile environment for growth. Whether you're a seasoned institutional player or a retail investor looking to green your portfolio, now is the ideal time to explore the new frontier of renewable energy investing.